Most dentists trust financial advisors with their hard-earned money. But what if I told you that this could be costing you literally millions of dollars over your career? Think about it. If your financial advisor got rich from the same advice they give you, wouldn't they be retired by now? Instead, they keep dentists locked in a cycle of fees, low returns, and zero passive income. In this video, I'm exposing why traditional financial advice is broken and showing you how to actually build wealth without Wall Street. Hey guys, welcome back to another episode. I'm Dr. Johnny Walker. On this episode, we help dentists achieve true financial freedom through passive investment in real estate and alternative assets. Quick reminder that we are going to have our second annual Passive Investing for Dentists Summit. It's going down in Miami, hot, sunny Miami, in July 18th and 19th. The ticket prices do go up over time, so grab yours now. Go on over to our website, walkofwealth.com. Fill out a contact form. We'd love to hear from you. All right, let's get into today's video. Why are traditional financial advisors costing you millions? Well, the problem number one is you're paying hidden fees that eat your wealth and kill compounding returns. Most dentists don't even realize how much they're losing to advisors' fees. For example, if your advisor charges 1% per year, you could lose hundreds of thousands of dollars over 30 years. Remember, there's no alignment of interest between your financial advisor and you. They get paid no matter what, even if you lose money in the stock market. And if they're taking money when the market is down and they're taking fees from you, they're taking money straight out of the principal, and they are getting rewarded for negative performance. Here's an example. If you invest $1 million with a financial advisor charging 1%, that's $10,000 per year in fees. Over 30 years, that's $300,000 plus gone just in assets under management fees. Well, here's a better alternative to that. Investing in real estate, private equity, and other types of cash flowing assets where you control the return. Problem number two, financial advisors push low yield investments that keep you stuck working. If your goal is to invest in low yield investments and hope to retire at a decent age before you're old and decrepit, well, good luck. 401k plans, mutual funds, and stocks have low, unpredictable returns over time. At the time of this recording, the stock market is at an all-time tear, but it's fraught with volatility that is soon to be coming. And when you really look at the overall returns of the stock market over a long period of time, whether it's 30 years or 50 years, the returns are a paltry 6 to 8% per year. They don't produce any passive income, so you're stuck waiting until age 65 to access your money. And guess what? You're fully exposed to market crashes, like in 2008, the great financial recession, and in 2020, the pandemic made market crash, right? Now, if you were looking to retire in either one of those years, well, either you took a big hit and retired, or you staved off retirement and worked for another 2 or 3 years, well into your golden years. Here's an example. If you have $2 million in a 401k plan, financial advisors say you can safely withdraw 4% per year. Well, guess what? That's only $80,000 annually before taxes and inflation. Ladies and gentlemen, I don't care how frugally you live, that is not financial freedom. Here's a better alternative. Invest in cash flowing assets, things that actually produce income on a monthly or quarterly basis. Things like multifamily real estate, oil and gas, self-storage, private equity businesses, right? Businesses that generate between 10 to 30K per month in passive income. Problem number three, financial advisors don't teach you how to reduce taxes. What financial advisors focus on is maxing out your 401k plan, which doesn't save you much in taxes now. They ignore high impact tax strategies like real estate depreciation, oil and gas write-offs and working interests, and self-directed IRAs. These are things your financial advisor will never tell you about. And there's a reason they won't tell you. It's not because they're bad people. It's because the companies that employ them and where they place money into these large institutions, these institutions guide where the money goes. And they say, hey, you can invest in anything you want as long as it's in the stock market and we approve, right? So they completely ignore some of the tactics and tools and strategies of the wealthiest. For example, I know a dentist who made $500,000 last year, but he only paid taxes on $250,000 of his $500,000. All because he used real estate and an oil and gas investment to have tax deductions. But his advisor never told him about this. Here's a better alternative. Learn about these tax-efficient investing strategies that let you keep more of your income. The strategies are out there, but it's up to you to take advantage of it. Sometimes it's just about learning. So hopefully this video is a stimulus to get you going. Problem number 4, financial advisors are salespeople, not investors. Let me say that again. They are salespeople, not people investing. Most financial advisors don't even invest in what they're selling you. They get paid commissions for pushing expensive mutual funds and insurance products, whether it really benefits you or not. They won't teach you about real estate. They won't teach you about private equity. They won't teach you about passive investing in alternate assets. And the simple and true reason is because they don't get paid for it. Here's an example. Go ask your financial advisor, hey, Mr. FA, how do you invest your money? And most won't have a good answer because they don't practice what they preach. Here's a better alternative. Learn from successful investors who have done it before and who actually build wealth outside of Wall Street. All right, now we talked about the problem, we talked about some alternatives, but let's talk about some solutions. How dentists can actually take control of their wealth. Well, step number 1, you have to shift from a stock market mindset to a cash flow mindset. Cue in Robert Kiyosaki, Rich Dad Poor Dad. Instead of chasing 401k growth, focus on monthly passive income. How can I invest my hard-earned capital into things that start producing money monthly? Income that comes in monthly without you having to do anything for it. Think about things like commercial real estate, self-storage facilities, and private businesses. They pay you now, not at age 65, because a lot of people, we need the cash flow now so we can step back from dentistry, so we can supplement what we want to do. Step number 2, cut out the middleman and invest directly in things like syndications, private equity, and alternative investments, and completely cut out these Wall Street toxic fees. You keep more of your profits instead of paying advisors. Step number 3, use tax-efficient strategies to keep more of your money. Real estate depreciation, cost segregation, oil and gas, working interest write-offs, self-directed IRAs. Invest in real estate inside your retirement account. For example, by shifting from stocks to cash flowing assets, I replaced my clinical income. And now I work because I want to, not because I have to. This is the mantra of Walk of Wealth. This is the mantra of achieving true financial freedom. All right, guys, let's recap this video. Number 1, financial advisors charge high fees and push low return investments. Number 2, they don't teach tax saving strategies that help you build wealth faster. And number 3, most dentists never achieve financial freedom by following traditional advice. The solution? Learn how to invest like the wealthy, outside of Wall Street. All right, guys, hope you enjoyed today's video. If you want a step-by-step guide on how to break free from bad financial advice and start investing like the wealthy, download my free guide, The Passive Income Playbook for Dentists. The link is in the description. Go grab it now.